Hey, we are live. I'm Palm Beaches Paul, your host of Pints with Paul. It's another Thursday evening, and welcome back. Man, I was trying to get the music. I'm still learning this, like trying to get the music going. Let me see. What do we got for music? That's acoustic, cinematic. We don't want that. What's this music? I'm still having fun with the little bit of music that they have on here. Let's see what we got. What is this? It's not playing any. Oh, there it goes. Okay, here we go. That dance pop. Anyway, guys, I'll get it one of these days. Anyway, welcome back to another episode. I appreciate you guys being here. We've had a lot of fun the past couple weeks. We've had some realtors as my guest, but as I promised, I told you that I was going to bring back some of the pros, and I have two great pros with us this evening. I have two of the coolest guys here in South Florida in the mortgage industry, and we're going to bring them on here. So John and Chris with US Mortgage, they're going to answer your questions. You know, the real estate market right now is still crazy. If you're trying to buy a home, you're not one of those people that have, bags of cash and you actually have to finance a home like a lot of people, then these guys are who you want to talk to. They're going to have some answers for you to some, as the title was, not your parents' mortgage, right? There's some new programs that are out there, and they're going to talk to you about some of those programs tonight. So have your questions ready. Be sure to ask these guys. They're here to answer your questions. They're here in the South Florida marketplace. They understand the challenges that people are going through with buying a home here in South Florida, and it is a challenge. I will tell you, I've been so busy this week. It's been absolutely crazy. And, seeing the offers, not only on the buyer side where I'm submitting offers, but being on the listing side as well and have listings and seeing offers come in and everything. It's a crazy market. Some say it's slowing down a little bit. I don't know about that. I had a property that went off and came back on the market and had multiple offers literally the day that it came back on, like instantly. So I think it's still a hot market, but some may differ. So we're going to bring them on real quick. It is Pints with Paul. I'm having this Oyster City, which is one of our local Florida beers here. So if you got something cold, drink it. Cheers. Welcome to South Florida. It's getting hot outside. Trust me. Had to crank up the AC today. Yeah, summer's coming. We don't have winter. We don't have spring. We have hot summer and what we call cool summer. That's our weather here in South Florida. So it's still kind of nice and breezy out, but yeah, man, it's definitely warming up. The weather's starting to heat up a little bit. So, all right, well, let's get to it. Let's bring our guest in. I've got these guys waiting in the virtual green room. So let's welcome John and Chris. And boom, welcome to the show, gentlemen. How are you doing?
Excellent. Thank you.
Very good. Thank you. Yeah.
Good deal. Let me, I appreciate you guys coming on. And, I know I've met you guys down at our office a couple times. You've been there at the KW office and talked with us. And I think you've been to a couple of our events that we had and stuff. So always nice chatting with you. I know, Chris, we talked about doing something a little crazy on here, but, maybe the next time we'll do the whole the kiss makeup thing.
You want to share the original vision?
Yeah. So go ahead. Good. Let's tell the audience. We got a few minutes to kill.
So when we were kind of whiteboarding this, how does it going to look? I proposed, because Paul's a music guy and we're both members of the KISS Army. We said, let's spice up mortgage knowledge by making us wear KISS makeup. So that was the original vision, was we were going to come in all makeup and ready to go, just to not be your father's. I guess that might make us our father's mortgage, but
yeah, that would date us a little bit. I was part of the KISS Army. I was full on. I was Peter Chris. I was an actual drummer, so I really did play. We had a mock-up. We had a band. I had one friend playing a tennis racket. That was cool until we could find a used broken guitar. Another guy had a flying V that we made out of plywood, like that, or or just like real thin, whatever. And so he had the flying V, but I had we had costumes, and we would put the speakers out on the. This is before the word karaoke was a thing, right? We're going back to 1976, and in the backyard, and I would play my record player with this cheap speakers, and I would crank that up. But we went beyond just like doing karaoke, right? We actually took, because we were kids of the 70s and it was a different world back there. We weren't hovered over by our parents. So we
Yeah.
took all of our firecrackers and made flash pods. So we took all of our firecrackers and our bottle rockets. I'm not condoning this. Anyone, do not do this. I'll tell you right now, don't do this.
You better
But
get the disclaimer.
Disclaimer that do not do this. But we were doing all sorts of crazy stuff, and we had a lot of fun with it. And we had people that would hop over the fence from the apartment complex behind and actually watch us perform and stuff. And so that was like, so it was cool. So
Perfect.
it was fun, man. But then I went on and I was a drummer. So, but anyway, enough about my crazy childhood. That's for the therapist. But so look, I know you guys got some stuff to do tonight. I know you're doing some hockey later on and stuff. So, and I'm sure the audience doesn't want to hear about me and my childhood. So let's talk about some mortgages and, the market. From what your perspective, what you guys are seeing. I mean, I'll tell you for mine, it's still hot. We're still getting multiple offers on listings. And when I'm out competing for my buyers, we're either getting beat out or we have to do crazy stuff to try to win. And I mean, I haven't seen it slow down to any great degree. What are you guys seeing on your end as far as on the finance side?
The hardest part these days is not necessarily getting the loan or getting it closed or even getting it closed quickly. The hardest part is your job, which is getting the house under contract. We have more pre-approved buyers than ever. It's just lack of inventory and unfortunately lack for those that don't carry the cash to stay competitive to really jump on offers. And just the price points continuing to go up. So if anything, we're dealing with more counseling as you are on your side, unhappy buyers, not with our service or with the realtor service, but just dealing with always being beat out on transactions right now due to cash.
Yeah. It's amazing. I mean, the cash buyers that have been coming here to South Florida, it's overwhelming on all levels, not just high-end homes, where I have people that are buying homes up in the $950,000 price range, and they're getting beat out by cash buyers there. But then obviously you have the lower end and people competing against investors who, it's like it's a $370,000 home, and they're like, oh, that's pocket, no problem. Yeah, I'll pay $400 for it. I'm not worried about the appraisal and stuff. And your average buyer doesn't have that extra $25,000 laying around to say, yeah, I'll cover the difference.
Right.
They have their 10 to 20% to put down, right, in their closing costs. So it's crazy.
I mean, you see a lot of transition to where all of lenders are trying to basically get approvals done in a faster period of time, work everything done within that 10-day contingency, try to get the appraisal done within the inspection contingency so that they can still sign a competitive offer without a loan contingency, without an appraisal contingency. But really everything hinges on the lender and the appraiser performing within those 10 days so that they have a way to back out of the contract.
Right.
A lot of the clients that we approve these days are having us approve them as cash buyers. About 50% of them do have the cash or a backup plan if they do get in a jam. The other 50% do not, and they're counting on everybody coming together to make it work. Some of those clients we've worked with and we've had them all the way through underwriting so that they're completely approved. So really the only thing that can get in their way is title or appraisal. The unfortunate thing is right now appraisals are coming in lower than purchase prices. They are catching up, but the percentages that appraisals are coming in lower, which is causing these eligible buyers that don't have enough cash to bridge the difference to fall out of the deal. Most, though, I will say, are finding a way to make it happen. You're not seeing the seller give in, but you're seeing the buyers find a way to pull it all together and make it happen.
Okay, that was going to be my question. I was going to say, are you seeing buyers like we did in the old days where they say, okay, fine, I'll meet you halfway. I'll come down 5,000, you come up. Yeah,
I mean, and I've been doing this over 20 years now. In the past, that was it. Let's just be fair. Let's meet in the middle. Let's move on, shake hands, and close the deal.
Right.
Now you have sellers and listing agents. Understandably, they have 3 cash offers right behind the buyers. And as much as they like them, it's not financially sensible for them to, not move on and take the next offer when there isn't an appraisal contingency.
Yeah. Yeah. Are you still getting as many applications as, say, 3 months ago?
Well, refinance volume is, gone down substantially. So, but from a
Okay.
purchase perspective,
Purchase.
no, we are seeing as many, I would say, applications as 3 months ago.
Okay, so you haven't seen it slow down. There's been, you follow the social media, you look at other agents, you see people posting on Facebook, you kind of look around and see trends. And there's been some people saying, hey, we're not getting 50 people through the door with an offer. Now we're getting 15 offers. Like, that's a bad day. Like,
Yeah, I know.
Yeah. Oh, we only got 15 offers. I mean, I remember when we'd be sitting at the 15th day on the market going, please come look at my property, please. And now it's like, oh, we only got 15. But yeah. So there's people trying to, and real estate's a funny thing because I think people talk about it enough. I think they think they'll make it happen. Like, it's a seller's market. It's a seller's, and everyone's like, yeah, it's a seller's market. And we're in this crazy seller's market. And everyone's like, oh, everyone's going to pay over asking. And it's like, I think people are like, oh, it's slowing down. I think if they believe they say it enough, that it's going to happen. But I'm just wondering, are you seeing any actual data or statistics that show that it is in fact slowing down?
Not based off the applications that we're seeing coming in for purchases. We are dealing with a lot of frustrated buyers, especially first-time home buyers that are looking within a certain price range, can't go higher. They're maxed out on their debt-to-income ratios, and the sellers just continue to raise the purchase prices. I mean, the unfortunate thing, and fortunate for sellers, is that right now a lot of people are looking at their homes as a lottery ticket.
Right.
So they're putting up some obnoxious number and getting offers at that number or close to, and selling their property. And that continues to drive the market. And a lot of it just has to do with inventory. I do think that just like any market, things work in cycles, and we're going to see some cycles through South Florida and in all of Florida, even though it's a sand state. We're going to see things where they will level out in certain areas, that values are not just going to gigantically go up. Because the thing that's going to play a role now is that interest rates have basically within the past 4 or 5 months gone from the 2% to the 3% to now the 4% range.
Gotcha.
On a $500,000 mortgage, that can represent $200 to $300 a month. Most buyers that I speak to, $200 to $300 a month is not going to sway them on buying their dream home.
Yeah, what is sitting at? Like, I think I just went and tried to look real quick. I was taking what are we like 4.67 right now on a 30-year?
Yes, for a conventional, 30-year fixed mortgage. And something we'll dive into a little bit is the non-QM market, which is basically, call it alternative documentation, which is very popular, and there's a lot of neat programs. But that market, because things move so quickly with interest rates over the past really 45 days, that the non-QM markets have also moved very quickly. And in turn, those interest rates have gone up as well. The volatility is never good for banks or for hedge funds that are issuing mortgage-backed securities. So with that volatility, they price everything worst case. The best thing that can happen is, we have the unfortunate war going on, but the best thing that can happen is just some stability. Then in turn, interest rates will calm down a little bit. Programs and funding will be there with no issue.
Gotcha. Yeah, I mean, it's, there's a big, a lot of our people here, potential home buyers are people in the hospitality industry or service industry. South Florida is very, very known for that. Obviously, we always have been, right? It's a destination. And, it's really tough for those people that are out there. And not only them, but our first responders and teachers and those people, the people who aren't pulling in, the $100,000, $200,000, $300,000 a year. It's like, it's such a it's like, it's almost pricing out a whole lot of people. And so you wonder, is it going to set back to something where it gets to a stable market where those people can also, because I know I would be busier than I am now if I could take this pool of people I have that are in my database and go home shopping with them right now. Yeah. But the fact is, there's literally nothing to go show them.
Right.
It's just out of their price range. They can't afford it. They're like, well, I could do it, but then I wouldn't have a car payment, or I couldn't have a car, or I'd have to, or whatever. So it's crazy. And when they ask you those questions as a realtor, like, I don't have an answer for you because I haven't seen it. And it's the same thing. I go on the MLS and there's nothing available for you. Or if they see it and I go, well, I don't want to buy that. That needs $100,000 worth of work. And I said, yeah, that's.
A lot of buyers that are moving forward, and I'm sure you're seeing this right now, are basically changing from their dream home, a single family residence with a yard, to something that either is a fixer upper or a condo.
Yeah.
Just to be able to buy something, and with rent prices continuing to increase. And that's why probably one of the best things that can happen for South Florida is a little bit of leveling off.
Right.
So that the reluctant sellers do realize that if they want to sell, the fear of a drop, they will go ahead and list their home at a fair price today.
You brought something up. You said something, and I will jump to the QM, and you guys talk about the programs here in a second. But real quick, if you don't mind, I want to ask you about Fannie and Freddie with regards to the condos. So I was going to pivot with a lot of my clients and say, let's get you into a condo, right? That's a good way to still build equity. You live in it, especially if you don't have a big dog, and maybe maybe it's a smaller condo, maybe they're young, they don't have kids yet or whatever. It's just, it works for them or whatever it is. Get into a condo, but because of what happened down with Surfside and everything, and now certain legislation going through, I guess, through Florida and certain stuff with the whole inspection and all that stuff and assessments. My understanding is now, and I don't know that they're all on board. From when I read the article, it sounded like a lot of the HOAs or management companies were kind of fighting that questionnaire. They didn't like the questions. Can you shed some light on that whole thing where they're basically saying, if this building has an assessment and it's not complete and it's not done, we don't want to back this loan because you haven't completely finished the repairs that need to be done for that building? I mean,
well, that's a kind of open-ended, because the first thing that underwriting will ask for is to understand what the assessment is, what the true cost would be, because ultimately what underwriting cares about, separate from that, if there's any type of structural issues, that's a whole other issue.
Right.
But what underwriting cares about is really the debt to income ratio and the impact on the buyer. So if there's a special assessment coming and it's going to impact the borrower's ratio for the next 2 to 3 years, $500 a month, or whatever it may be, that could be the deciding factor of whether or not they qualify for the loan.
Okay.
What has changed a lot is Fannie and Freddie. Before it was put 25% down in Florida. Condos are different in other parts of the country.
Right. Yeah.
But in Florida, with 25% down, you get what's called a limited review, where you don't really have a lot of questions asked, and it's very easy to breeze the file through. Well, another way that we would bridge that is we would do a first and second, and then the borrower can put 10% down. It's become very common. A lot of lenders are doing this.
I remember that. Yeah.
The issue now is that Fannie and Freddie has come up with further guidance where they are asking more questions, even when it's a limited review. When a client puts down 25 or 30% on a condo, Fannie and Freddie are still asking particular questions to see if it fits those guidelines.
Okay.
Fortunately, there are some non-QM, non-qualified mortgage programs available that can kind of scoop up those buyers that still wish to finance and have the means to put down 25 or 30%.
Nice. Okay. I appreciate that. Well, let's jump into it. You want to talk about the non-QM and tell the audience a little bit about, and if guys, if we got some people watching, feel free to ask questions. I'll get to them the best I can. But if you have a question, just, post it there. I'll go take a look at the comment section if there's something, and I'll ask the gentleman to answer it. But you want to go ahead and get into some of the programs that you want to talk about?
Yeah, I think what I feel, and Chris actually was the one that brought this up, and it was actually something that prompted a lot of the conversations that I had with Dan DeMont when I first met him, was just scenarios. I think being able to understand how something applies and how it may apply to not just a client trying to qualify for a mortgage, but most importantly, the realtor trying to guide the client, that just because a big bank looked at 1 or 2 years of your tax returns and said no, or you need to wait a year, or you need to show more reserves, doesn't mean that you can't get a loan. And a non-QM type product doesn't necessarily need to be somebody that's buying a $2 million home, a $1 million home. It still applies to somebody that may be buying a $250,000 to $350,000 home. Yes, self-employed individuals are usually the ones that play the tax game, as we all do. We like to make as much money as we can in the United States and pay as little in taxes. So, but what happens with these non-qualified mortgages is they actually perform better than Fannie Mae, Freddie Mac, and FHA mortgages. Buyers and borrowers make these payments on time. There's a lower default ratio. There's a lower foreclosure ratio, and they're performing, which is why hedge funds and these different investors are backing these type of mortgages, because it's basically goes back to the old days. Nowadays, Fannie and Freddie, everything is done digitally. It's basically automated. You run through a system. There's not a lot of logic. It's mostly you either fit or you don't. When you deal with non-qualified mortgages, it goes back to the old days, even before my time, where it was manual underwrites.
So a little bit of human interaction, I guess.
Exactly. Really looking at somebody's credit, really understanding that, you know what, they have a 580 score because they went through a bankruptcy. They're trying to rebuild themselves, but he makes $250,000 a month. You know, he can qualify for a loan. Let's find a way to make it happen for this buyer. He's putting 25% down. It's low risk. His credit score, while it is important, is not the most important factor. Cash flow is. So the first thing that I would talk about, which kind of coincides with what we were just discussing, is bank statement type loans. So you have someone that shows $300,000, $400,000, $500,000 in gross income, has an auto body shop, but he writes off everything, pays his employees. He only has about 25 grand that flows through to his 1040. Every single bank will tell him no, or show enough income for 1 year, pay Uncle Sam 50, 60 grand in taxes, or maybe even 2 years, and you can get a home. And that's what we used to advise clients to do as well. With these non-qualified mortgages, they don't have to file their tax returns. They can go ahead and show 12 months of their bank statements. They either can provide a profit and loss with their CPA, or what we look at is just the deposits going into their bank account. What is most important to a Fannie or Freddie underwriter is your W-2 income. They come up with the ratio calculation, base it off your credit score. It works or it doesn't. When it comes to a bank statement type program, it's purely off of the deposits. They want to see that your business is making money on a monthly basis. Like any business, it may not be, it may be every 2 months that you have very good months. Right. There's logic involved. They're going to keep going out in 12 to 18 to 24 months to show that you have the cash flow and that you can qualify. And what's nice about these programs is there's no pay stubs, no tax returns, no nothing. It is purely credit, assets, and then your bank statements to show cash flow.
Oh, that's pretty interesting. So I meant that, I mean, well, I can see why you're talking to Dan about it, and obviously with agents and stuff too, right? So with agents, what our agents make 1 month, you make a ton of money, and then you can go and, sometimes you're on that roller coaster. So yes. But then you show again, the money comes back in. So you guys are going back and look, okay, yeah, he's a little slow here, but then he's been consistent over here. So you take that and you look at the average of what they're doing for the year.
Correct. And what we will do very often is ask a client, send us everything. Let us see all the pieces of the puzzle when it comes to the bank statements. And then we may just hone in on the last 1 or 2 months or 3 months of bank statements. They might tell us right away that we did not have 6 months of good income. The 6 months prior to that were great. And then my next question to them is, do you have a CPA or accountant that you work with on a weekly, monthly, or yearly basis that would be willing to work with you on a profit and loss? Most CPAs, once they understand that we're not asking for an audited document, we're not asking for you to review their tax returns. We're purely asking you to use a simple form and sign off that, yes, these deposits are what are going through their bank account. These are reasonable expenses. This is a realistic net income. Now, I'll give an example of a auto detailing shop that I just approved for a bank statement type program. He sent me his tax returns, and he literally had about $432,000 in gross income. But what flowed through to his tax returns was about $32,000 after he wrote off everything else. And that's what he actually pays taxes on. His CPA was a little bit confused on what we needed. So we scheduled a conference call. We went over everything that we needed. Once he understood, all he did was take away about $100,000 in, you can call them bogus expenses, but they're basically realistic expenses. But for the purpose of the profit and loss, that's, as the investor and the lender, that's all they want to see. They want to see something that actually shows realistic expenses so that they can put it in the file and feel comfortable signing off on the client providing 2 months of bank statements instead of 12.
Have you had a lot of people? Are you getting a lot of people reaching out to you on this program?
Yes.
More and more for sure. Just given all that's going on, and this being a destination, and a fair amount of Florida residents are at a point where they are self-employed or were self-employed.
Right.
So for them, the ability to, and I've never heard you say this before, by the way, talking about how this becomes a more thinking person's product to really take all the pieces of the puzzle, which I have heard you say, and then really think through them using human power to understand how they fit together. I think that's become, that's why we're so excited to sort of talk through it.
Well, well, first of all, I think anyone that's ever dealt with anything through automation and stuff can get really frustrated. We've gotten into such this society of, hey, just fill this app out and we'll run it through the algorithm. And well, okay, you get a credit card and stuff. But like, everyone's got different situations. I have a cash buyer right now that's trying to buy a condo. But she has the cash, right? But her credit score wasn't that good. But like the HOA is like, well, your credit score is like, but she has the money to pay the fees. She has the money to buy it. But it's like that credit score just kind of gets them. It's just gotten to the point where they just rely on that and use it as a crutch to just deny people. And it's like, but she can afford the place and she has the revenue coming in monthly to afford the monthly fees.
Right.
What does it matter? Like, she's not going to be buying on credit or anything there. But that's a whole other thing. But it's crazy how it affects so many people in different things. But that's a pretty interesting program. So and I'm sure when you guys come to the office, we're talking to you more about it.
We hope so.
Well,
yeah.
And to piggyback on what you just said about credit, that's one of the most frustrating things, because in our industry, and I commonly say this to self-employed individuals, is you could have someone that earns a paycheck, has zero money in reserves, just enough for a down payment, and they're able to get a loan much easier than someone that is a self-employed individual, has tons of credit, has tons of reserves, and their loan flies right through the system. And that's just part of the business. Retired and self-employed individuals are a lot of the clients that we deal with that come to us for these programs because they've been turned down for banks. And just to piggyback on what you said about credit, with the way these automated systems work, someone that has a $500 Capital One card and has a 730 credit score is able to get a much better interest rate than someone that might have 4 auto loans, an active business that he uses those cars for, but because he missed a car payment because of a billing error and he has a 630 credit score, the person that has the higher credit score but less credit historically still ends up with better terms than that person that obviously has the credit history.
Well, I know there's some, I don't know exactly, but I remember reading, I know there's some things going on with our government that they're addressing credit and certain things. I know for one, they just talked about removing the certain amount of healthcare debt, which affects millions of people, right? Yeah. I guess there's certain things that won't, I'm people don't quote me on any of this. I just, look up the article. I just remember some of them talking about that they're passing some new legislation that will help people that have that on their credit, and people, God forbid someone gets sick and they can't pay the bill and stuff. And then they're ruined for life because they got this stupid medical bill and stuff. So I know they're doing some things, and they're trying to work. I think they're trying to revamp the whole credit rating system because it has gotten so where it just it can almost ruin some people's lives. I guess, it's just crazy. I mean, not that you shouldn't be responsible about your credit, but you know what I'm saying? It's,
well, and we could do a whole seminar and we could definitely talk about credit, in detail for quite some time. But I can't tell you how many times we have someone that has perfect credit across the board. and we pull their credit and they're like, you're kidding me. My credit score's a 630. There's no way. You know, the Credit Karma or whatever tells me that my credit is a 780. and I look at their credit and it's a medical collection.
It's one medical bill.
Yeah, $500 and under. And it's very simple. And we end up helping them get it deleted and removed from their credit report. Most of the time they do actually owe it. And it was just a billing error and something that they missed or they ignored, whatever it might be.
Right.
But a lot of times and that's the thing with the credit system is one little $50 medical collection can drop your credit score 100 points.
Yeah. Yeah. It's yeah. I mean, we'll see what they do with it. If they're going to, what fixes will, take place for that. But you're right. Well, that's a really cool program. So let me ask you this, with the market and where the market's going now, are you seeing are there any other programs that you're seeing people going away from the traditional, other than this one, obviously, but are there any other things you're seeing people doing? Like, hey, well, maybe if I do this, I mean, I don't think anyone's doing an adjustable rate, right? I mean,
not with where the adjustable rates are. They're so close to fixed.
Yeah.
It doesn't make sense. One of the products that I get excited about because it works very well for realtors with clients that have a lot of cash and want to invest in Airbnbs and they're considering paying cash is the rental debt service program. It's basically a commercial type mortgage for residential properties. So, there's a lot of turmoil in the market. So the loan to values I'll be conservative with. But if you have an investor that wants to purchase an investment property, they can put 20% down on an investment. And obviously, the more they put down, the better the terms are. But they can do a 30-year fixed, a 40-year fixed, a 40-year fixed interest only. And the qualification, this is the neat part, is not tax. Is not.
That's
not
all right.
minor. That's
minor in the other room.
Is the qualification is no tax returns. You don't even need employment. And it's purely based off your credit score, that you have enough assets for the down payment and that you have reserves after closing. And it's based off of the cash flow. And as you know, if let's say they buy a $500,000 home and they put down 20 to 25%, if that $500,000 home appraisal comes back with the market rent analysis and shows that can be rented for $4,500, and the new mortgage payment on $350,000 with taxes and insurance and HOA, let's just say is $3,000, that property cash flows, they don't need anything else. And the neat part about this is we've had a lot of investors and clients that have $1 million, $2 million, $3 million, do not have a job, are looking at how they diversify. The Airbnb market is obviously very hot, especially down here in Florida.
Yes.
And then instead of them paying cash for 2 properties with $1 million, they can now take that $1 million and buy 5 properties and put down 20% on all the properties. So it's helped realtors not only help their clients buy, instead of 1 or 2 properties, buy 4 or 5. And the neat part about it too is it's unlimited as far as how many finance properties that investor can own.
Wow. That's pretty cool. Well, you guys watching, their contact information is down below. Be sure you jot that down. If not, we'll make sure you can get in touch with them. But we haven't had any questions tonight. Tonight's I think everyone's being a little shy. I don't know. Maybe it's we had a few people pop on, few people pop off. But come on, someone ask these guys a question. So one of you out there, someone asked something, and who's our little friend that joined us?
Oh, this is like every good parent, right? When your kid grows up and goes to college, you inherit the dog. So this is Penny, and she is. Let's hold her up. Say,
oh, puppy! There you go. Hey, Penny.
Yeah, she clearly in my mind, I'm like a Bond villain when I'm holding her in my lap, right?
Nice. Well, one of the questions we keep seeing. So let's talk about this a little bit. One of the things you see a lot through being on YouTube, you see a lot of people make videos and people always talk about the crash and this and there's going to be all these foreclosures. You guys are on the mortgage side. I haven't seen anything looking through, really see a bunch of anything through any of the multiple listing sources. As far as the properties that are foreclosed properties, what are you guys hearing any, people keep thinking, oh yeah, I'm going to wait. Those be foreclosures. And I'm going to jump out on the market.
Yeah. Is another way to ask that question, Paul, because I hear the comparison often to 2008.
Yeah. Oh,
How do the conditions now compare to 2008? You and I've had this conversation. I'm gonna let you answer.
Well, I'll tell you my answer to that.
Yeah, go ahead. Start.
My answer from you guys is that, back then you didn't have to have a pulse, or maybe you did a pulse. It didn't matter. It's like, hey, they're okay. When they're dead, it's all right. We'll give them a loan.
Yeah.
It didn't work. And so, but I joke. But I mean, that's what we say. It's like, hey, if you had a pulse, you got a loan back then.
The difference today is that the clients that are buying homes are qualifying for those homes. And whether it be a conventional type of loan, Fannie, Freddie, FHA, or it's a non-QM. Non-QM and these hedge fund backed loans actually perform better because they're actually qualifying and they're putting skin in the game. The biggest issue with what happened back in the day was, yes, I mean, even dogs, anybody was getting a mortgage. The unfortunate thing is you had occupancy fraud was a big problem back then too. So you had clients buying 8, 10 properties within a year or 2 years, all as primary residences with no rental history at all. And then all of a sudden when the market crashed, they had no reason to hold on to the property. They had no vested interest. So everybody just walked away. And obviously there was 100% mortgages, 100% stated mortgages. None of that exists today. Anything with lower documentation for someone to qualify requires more of a down payment. So anybody that is purchasing is showing not only that they have skin in the game, but also that they have reserves after closing.
That's a great to jump on that term, skin in the game. I've had people, and it's different for everywhere, but down here, back when I first started 9 years ago, you could get away with putting 1,000 or 2,000 down as an escrow.
Right
now, realtors like this, realtor sellers. I mean, at least my experience, they don't even want to see that. They're like, if it doesn't say at least like 5,000, 10, 20,000, and 20,000, 8 days later or 10 days later, whatever you can put in the contract. But they want to see real skin in the game. They want to see that someone's going to put their money where their mouth is when they're putting that offer, as opposed to back then where someone would put an offer on one house, put an offer on another house. And if they lost one, they said, oh, well, I lost $1,000. That's no big deal. They weren't worried about it.
They walk away.
Not too many people, buyers are going to walk away from 20,000, or the initial 10 and another 10. They're not going to walk away. And I've had to explain that to some people, like, yeah, you've got to put skin in the game to make these sellers realize that you're serious about it. Yeah. So, I mean, I've still seen some that are a little less, but on both sides, both on listing and on selling, I know that, I've seen it where it's like, yeah, I've had agents say, yeah, no, your people need to put more money down.
The other tool in the toolbox, Paul, is the ability to play offense now that you didn't have back in 2008, where the short-term rental market is in a destination market like we live in. You can rent your place out. So if you're trying to stave off foreclosure and losing it, you just see more and more revenue stream tied to your residence. So a worst case scenario, you don't want to lose it. That's one tool that was not available back then.
Right. And for all the people that keep thinking, I guess a lot of people were looking at the forbearance, right? And how they thought, there's going to be all these foreclosures. Like, I mean, anyone, unless they're like buried, they put their house on the market and they'll get this ridiculous offer for it.
Right.
And they're like, okay, we paid off our loan. We're going, we might not make as much, but we're done. And we're not, now we'll just go rent or whatever. But 2008, where it's like, we bought it for this and it's only worth this. And, that's, yeah. So, but
banks also learned their lesson, so to speak, with what happened in 2008, because it happened so fast and there were so many and it hadn't been experienced yet. Yeah. They've gotten much better, and COVID was handled a lot differently with the forbearances and modifications to keep borrowers in their homes. Yeah. Rather than immediately telling them they have to go late like they did in 2009, 2010. People would go late for years, build up this huge balance, and then their credit would be ruined, so they had no way out. And that's what added to the foreclosures as well.
Yeah.
was lucky I wasn't in the business then. I was just thinking about it. I got in 2011. So right at the end of it, right when we were coming out of it. And I was like, wow, this is going to be fun. One of my first actual deal was a short sale. Yeah, that was fun.
That was fun.
I want to hit the person that called him a short sale. I know why we do, but it's like, there ain't anything short about it. Trust me.
No,
There's nothing short about a short sale. So, but we got good at them. And my boss and we really learned how to handle them. And working with the bank, those were fun. Yeah, those were fun times. I'm glad I haven't done one of those in such a long time.
I was going to say, you going to take your shirt off and show us the scars? Because there's probably a few of those, right?
Like, all right,
you don't want to see that on this.
Here's the offer. All right, I'll let you know in 90 days. Maybe we'll hear from the bank.
Yeah.
So, see if they accept it. So, cool. That's a lot of exciting stuff, guys. It's you want to, and I got one other question. We'll save it for you. We're sitting at the 40-minute mark, and usually I'll go 45 to an hour. And I know you guys got some stuff. Is there anything else that you want to kind of share with the audience? Any things that you see coming? Any trends? Anything that you want to get out there and kind of let people know about?
I guess it's like everybody wants to say that they have a crystal ball. Nice. Everybody wants to try to forecast, and we all read articles, and obviously I follow mortgage rates and mortgage bonds and what's going to happen. And even my neighbors in our neighborhood constantly are like, John, is the market going to crash? Should I sell now? With rates going up, I do feel that many buyers that could have qualified will not qualify, especially with the price points we're at. And we're going to see purchase prices level off a little bit. What's the, almost unicorn effect, so to speak, is the fact that call it politically, religiously, or just for tax purposes, you have so much cash that continues to come into our state. So whereas the rest of the country may see some different slowdowns, I feel that Florida, as they call it, a sand state, is not going to see much of a slowdown. But I do feel that as every market changes, we've seen programs and everybody adapts, whether it be a couple months behind, to try to help people afford the current housing prices and find a way to achieve home ownership. Everything does work in cycles, and we're going to definitely experience one now. And I feel a lot of people that were going to buy are going to go on the sidelines just because of the fear factor of where interest rates are right now. Yeah, it's the number of people that I get a hold of because of my YouTube channel who talk to me, and I ask, okay, let's get you pre-qualified. Oh, we're paying cash. I'm dumbfounded by it. I'm just like, and I'm talking, like $1 million plus properties. Oh, we'll pay cash. I'm like, okay. It's like, must be nice. Like, it's like just unbelievable how many times I've heard that this year. It's just crazy. Yeah. And how many times we've lost to it. Like, I'll talk to the agent and it'd be like, hey, Chris, but they like the property. So, I know you can't say anything, right? There's a whole fiduciary thing, but do you have any cash offers? Yeah, Paul, I do. Oh, okay. Are they coming in under? Oh no, they're way over. And then you have the conversation with your buyer. How are we going to beat that? Like and I know there's probably people out there, well, Paul, you need to do this. It's like, yes, I know there are stories of people beating cash offers. There are some things you can do, but like when it's a really good cash offer and it's way above and there's no contingency, seller's like, I have nothing to sweat except an inspection. Yeah. Right. It gets nutty. So it's crazy, but fortunately there's a lot of people out there who still need good lenders like you guys and to go out there. And I have seen the trend. One thing I have seen is that we're not seeing as many of those cash offers on some of the lower end properties for a while. I think we're dealing more now. We're dealing more with who has the best conventional loan type of offer, who has the best loan and what terms and everything can you make it. It's not, you're not having to fight the guy that's opening up the bag of money and saying, hey, I got this bag of money and I want to buy your house.
Yeah. Oh, I was just going to say the investment buyer is going to leverage capital to make that acquisition. So you're seeing less of the I'll just pay cash because I want it and I'm going to pay above the ask and do all these things. So
right, yeah. So we have seen a little bit of that. So all right, so I
got two pieces of advice if we're giving our last 2 cents if you want them.
Yeah, man. Bring it. I'm
one
more viewers.
Yeah. So the obvious one is just don't sell without a plan on where you're going, because we just continue to see people that get all excited about the frothy market, and then they haven't really thought through where are we going to land. And you just don't want to be forced to leave a market or a situation that you're happy in. So that's my first point. And I totally forgot my second point. So it's there.
We'll bring it back to you.
Yeah,
all right. So we got. Thank you, Walter. Appreciate you always being there. I don't know if this is really a question you guys want to answer, but what is the situation with home insurance, and how's it affecting the amount of house you can buy? I mean,
the situation, the situation that we're seeing with home insurance is that a lot of insurance carriers, as any agent will tell you, have dropped out of the state of Florida.
Yeah.
And everyone immediately, even myself, questions this. Why? And I actually called a couple agents because I wanted to understand. We haven't been hit with a hurricane in a while. Why is this happening? And a lot of it has to do with them canceling so that they can come back in within the next several years and rewrite all their existing policies and put provisions in there, because what ended up happening was a lot of insurance, adjuster fraud, things in regards to roofs being paid for. So as soon as they're based, like any life insurance, it's based off actuaries, and homeowners insurance, they have their same numbers that they run. And as soon as they see that they're losing within a certain area, they're just going to pull out. And then it's not that they won't come back in the future. Right. But what that does is it limits the competition, and then in turn raises prices across the board.
Right. Yeah, I saw something. I didn't read it, and I'll have to go read it, but I saw something on the news flash that I get in the morning emails about DeSantis and talking about the insurance companies and how something has to be done in the state of Florida and stuff, because it's getting very difficult where you'll find a house that looks really nice. And other than the other question, Chris, I was like, hey, is there any cash offers? It's like, how old's that roof? Like, you want to, if it's not readily known in the description, the first thing's like, hey man, what's the roof situation?
Right.
It's 18 years old. It's comp shingle. It's like, then you gotta have the heart to heart with the buyer. It's like, do we want to get into this? You might not be able to get a policy, or they might want to not, because they're in that for the whole wind mitigation on it. But it's funny. It's like, you see it, because anyone that has a new roof on their listing, it's like in big bold letters. It's like new roof, 2021. I know, because my listing that has a brand new roof, 2021, and we told everyone it is a brand new roof. So, to make sure.
If you've got sellers that are just not willing to make any concessions whatsoever because the market's so frothy, you're right. It's like that is make sure you know what they're going into, for sure.
You actually used to negotiate a roof in the days. Yeah. I mean, it wasn't easy, but you would get some like, all right, well, we're not going to sell it otherwise. Let's figure this out. And you maybe get a credit, and then you had to, you realize that you're going to, when you buy this house and closing on it, you're going to be getting a new roof real soon. You better not go spend that money in the Florida Keys. You need it to, so. But Walter, thanks. Great. Appreciate you, man. Thanks for always watching, and thanks for your question. All right. So I know you guys get this one all the time. Here it comes.
Here it comes.
Here it comes. Where and how high are interest rates going to go, boys?
Oh, it happened. Seriously, I should have taken you over on this one.
All signs are pointing, at least based off economists and a lot of much smarter people than I, that interest rates they feel will be in the high 5s to low 6s by the end of this year. Now, that is what they're saying. There's a lot of factors that will go into actually that happening. The war and our involvement is going to be a big factor this year. Any type of resurgence of COVID or anything other chemical or disease is going to be another factor.
Yeah,
that the Fed is going to have to consider. But inflation is the big driving thing right now. And what happens in a lot of clients, they call me when the Fed raises rates. Well, the Fed just raised rates a 1/4 point or 1/2 point. John, is my rate higher? Well, that was actually priced into the market 2 months ago. A lot of what you see in rates and what the Fed does is what the Fed says they're going to do has more of a reaction on interest rates than when they actually do it. Personal opinion, don't hold me to it. I do feel that we're going to see interest rates go up well into the 5s, but I do feel, unfortunately, that there's going to be some different worldwide events that are we're going to have some drops back down. And then for very obvious reasons, and not to get political, but political changes over the next 2 to 3 years will have a big factor on interest rates as well.
Any time that goes on, there's always at the real estate, and people wait to see what's going to happen. That happens all the time. So, thanks for answering that one. I appreciate it. So
we get asked 10 times a day.
I know you do. I know you do. And every time I do one of these live streams, people are like, well, Paul, where do you see the market in 18 months? And I'm like, well, hold on, let me get my little thing, my crystal ball out. Like, I mean, it's just hard. It's hard to really know. I mean, who saw what was going to come the past 24 months? Who saw that? Nobody saw that coming. I'm not going to say it, they don't like you to say it on YouTube, but nobody saw that coming.
No. And I used to actually keep, back in the day, I managed about 100 loan officers at a division of a bank. And I actually kept one of those magic 8 balls on my desk because they would come in and ask me some of the silliest questions sometimes. And I would just be like, here you go. Here's your answer.
Highly unlikely.
Not likely to happen. Or was that
decidedly so?
Yeah.
Exactly. Yeah. Nobody can forecast exactly what's going to happen. But I will say that, in speaking to a few realtors recently, $150 to $200 is not in difference in payment for the interest rate. It's not going to sway someone from buying a house or not buying a house. So the loan part, again, is not really the hardest part of the process right now. It's your job, getting the home under contract. As the lender, not to pitch our services because every lender is offering very similar services. We just try to offer a very much more common sense, personal approach in working with clients, whether it's for 1 day or 365 days. And I just totally lost my train of thought.
That's right. I found mine, but where I think he was going is this is the second piece of advice. The sooner that we get to those conversations, because it becomes an advisory role. So you want to know where the market's going. You want to know what the rates are doing. We can't crystal ball things, but what we can do is do some of the investigative work to run diligence and find out what's happening. And then we can advise you so that if there has to be credit repair, if they're, based on what we see, understanding the puzzle as soon as possible, it only helps the process. And so that was my...
Well, and what I was going to touch on was that there's the difference between the confident buyer and a rush buyer. And a confident buyer is someone that's done their due diligence with a good lender and understands what they're up against, understands with the realtor that they're fully pre-approved. And then you can really get into the finer details of a contract of whether or not you can do a 5-day contingency or, what the seller will accept. Because before, going back 18 months ago, a 20-day loan commitment was, wow, that's great. That's better than 30 or 45 days. Now, all of a sudden, it's got to be 10 days and 7 days. And all of these we can perform, but it starts with the buyer really getting fully pre-approved and understanding what they can and can't do.
Yeah. All right. So for the all watching out there, when you hear realtors tell you need to be pre-approved before we're taking you out and looking at homes, we're not doing that just to be mean. We're not doing that because, we're doing that because you really need to have you got to have your crap together. You need to know what you can actually afford. And more ever in this time now, more than ever, you really have to know how strong you are with your financials and what you can do. So these guys can say, yeah, Paul, we've done this. We've looked at everything. Yeah, we can get the loan approval in 10 days, 9 days. That's not a problem. Where
it's the only way to go. Yeah, go ahead.
Yeah, no, it's so important that they know all the numbers, because I talk to every time with my clients and I said, look, before we do this, I want to have a conversation with the lender. I want to know if we put this offer in, what we're writing, because I don't want to have you lose your escrow. I don't want to lose the deal, right? I don't want you coming back to me and say, why did that happen? And like that, well, you weren't prepared. Right. We need to make sure that if you're going to do this, you can't go in an offer and say, oh, yeah, I'll pay over asking. Oh, yeah, I'll waive this much and pay this much over appraised value. It's like, you can't afford that. So you need to know what you can actually afford, and don't just I'm going to just throw anything on paper to win the deal, because you're going to end up getting sued or losing your escrow. And then you're going to yell at the realtor. And, and it's so important that you sit there and talk to you guys and make sure that you have a solid financial plan ready to go. So then when I go out and do put my offer, I'm very confident when I talk to that listing agent, hey, this is where they're at. You can talk to their guys. They've done everything. They've researched. They know where they're at. They're super strong. They're very financially strong. You know, we never guarantee loan approval. We'll never put that. Well, hey, we guarantee it, but there's a 99.9% chance you will not have any issues going through with this offer. And that's comfort to a seller who's like, for 21 days or 10 days, whatever, however long it takes, even with 10 days, you still have the HOA, right? You still got to get through all that mess, but they want to know that they're going to get that. Okay, awesome. We're going to get to the closing table.
If the hardest part of the equation right now, to John's point, is getting an offer accepted, and if there's multiple offers coming in on any reasonable property, you need to have that in place so that you're in position to compete. Because without it, then you're just not making a competitive offer, and it won't make it to the finals, let alone being accepted. And so it's so worth it. It's paramount, right? You know, and under different market conditions, you know, maybe you could make an argument that you don't need it out of the gate, but doing the work at the front end is just so smart. And right now there's just no way to be able to succeed without like having that pre-approval work done.
Yeah. And it helps because, and again, they can't call you at Saturday and expect to put an offer in at 5 p.m. and you haven't had a chance to do anything.
Oh, they can expect it. Yeah, it's just good. That happens occasionally, but
but realistically, like give give the guy a chance. Let him talk to you. Let him see what's going on. Let him get all your documentation so that he can put, so, John's not sitting there yelling at the dog because this guy wants approval and he wants to put an offer in 2 hours and he just called me. It's like, hello.
If you love your children as much as this guy loves his children, please try not to make us jump through hoops on a Saturday night.
Yeah.
Just do your best. We understand things happen, situations come up, but do your best.
And awesome. and take enough time to, sit down with a good lender and work out not only plan A, but plan B and plan C, and figure out what you're going to do so that you feel confident and can go out there and make, strong offers and get under contract. So it takes teamwork.
Yeah, because you can beat a cash offer with a really well positioned financed offer. It happens.
Yes.
People are doing it. I know I said earlier, I was kind of exaggerating a little, but if you have a really strong offer and it's going to net more money to that seller than the cash offer, right? And they look at everything and they go, yeah, there's really no risk in this. They've taken a lot of steps to eliminate any risk. Is sometimes you'll get, people are winning deals with financing all the time. So but it's got to be the right offer and you got to structure it right. And it's got to be rock solid for that listing agent to tell, hey, John, I know you got a cash, but here's this finance one, but the finance one will actually net you more money. But there's this, but everything looks good and they really like stop. It can happen. It does happen. So.
Yeah, I'll tell you, Paul, here's a good example. We've had conversations with the listing agent who's trying to, figure out which offer to recommend to be accepted. And that conversation is they want to talk to the lender. They want to know hey, how solid is this? Because at the end of the day, they want to know and need to know it's going to get done. So we make ourselves available to say, let's have the conversation. Whatever you need to know that we've done our diligence, that we are in position to fund the loan and get it done. They need to know that, and so we're certainly, our phone is always available to have that conversation.
Well, guys, that was 1 hour. We're at 58 minutes and 34 seconds. I know someone has to go be Wayne Gretzky tonight, so.
Well, at least I don't take my Kiss makeup off, so we're doing great.
Well, guys, I really appreciate you guys coming. I really, John, Chris, thank you very much for your time.
Yeah, absolutely. Thank you for having us.
So, and on a side note, they have the coolest business card. If you meet these guys, they have well, it's not for everybody.
Oh, I got one more plug since you just said it. In about a month.
Yeah, month to 45 days.
So our office is right across the street from the Seagate. You haven't seen it yet, Paul, because we're in the process of building it out. But
that's in Delray Beach, folks.
In Delray Beach, if you get to Delray Beach, which most people do, especially when tourist season ends, come see it.
I'll be riding my bike.
We're 2 blocks away from the beach. We're right next door to the Seagate off of Atlantic and Venetian. And our office is very well suited for people to come by and say hello. It's just that ping pong table kind of friendly, if that makes sense.
That's
so
awesome.
come see us. And Paul, that's a standing offer for you, obviously. But we
absolutely, I'll come down and visit.
We'll have the next round of this there.
Minus the kiss makeup. I don't know.
Well, like let's not rule it out. I mean, don't be quick to judge here. I'll bring the tennis
racket.
racket.
You guys, we're gonna do this at Halloween, okay? I'll come back at Halloween because now you got me thinking like, man, we could have some fun. So, but awesome. Well, I appreciate it. You guys are great. Thank you so much. This is going to be recorded, so the information you guys seriously. Although we had a few people, and thank you, audience. I really appreciate those who came on live tonight and watched. And Walter, thank you for your question. But it is recorded. The information you guys are sharing is very valuable to anybody, so they will be able to see this. They'll be able to come back and learn from this. And I'll make sure that I have all your contact information, so when people go back and rewatch the YouTube videos, they can reach out to you and get in touch if they have any questions. But thanks again. It's great information. I definitely want to talk to you a little bit more about the QM loans and stuff and how you can help my clients. I'm going to let you guys run, and then I'm going to sign off. So don't lose a tooth or anything tonight.
Yeah, it's going to do what it's going to do at this point. But I was going to say, Paul, have another beer and enjoy your Thursday night. And thanks for having us.
Yes.
Yeah, it's actually, it's boys' night. The wife is actually going to go visit her mom. And so it's me and the boy, and we're going to probably put on a movie or something and turn it up loud and act like, guys night. It's like
war movies or Westerns. We like
war, like John Wick and stuff like that.
Nice. Yeah.
It doesn't matter which one. They're all good.
Maybe we'll watch Bruce Willis since he left. Says he's quitting Hollywood, unfortunately. So
pay homage.
I love Bruce, man. Bruce is awesome. Guys, I will talk to you later. Thanks so much. Have a great evening. I'll see you around the office.
All right.
Thanks, Paul.
Right.
You too. Take care.
Right. That was awesome. Well, hey guys, I really appreciate everyone tuning in tonight to another episode of Pints with Paul. As always, you can reach out to me. I'm your local realtor here in South Florida with KW Innovations. Let me just throw my information up real quick. But there you go. If you have any questions, if you're looking to buy or sell or invest here in South Florida, I would love the opportunity to represent you. Those guys are awesome. So, and they really do have a cool business card. It's a really cool metal card. It's awesome. So, but that's it. So I got some new videos coming out. Be sure to watch the new videos. I did a fun one, a Tuesday tour video. I also was I got a great video coming up. I did the boat show here. That was just this past weekend. I tried to get it up sooner, but I just couldn't. But it's a good video. You guys will like it, man. There's some beautiful boats here in South Florida. And if you're someone who loves the water and want to be on the water, the boat show, watch that. There's some amazing boats. And of course, if you need me to help you find a house on the water, I love the water. So anyway, let's see if we can get a little music going as we key up and head out for the evening. I hope everyone has a great weekend. Tomorrow's Friday and it's kicking it off. It's supposed to be rainy here, so I'll probably be sitting inside. But got a little music. Here we go. Now I got it. There we go. It's probably too loud, but I like it that way. As always, guys, I'm Palm Beaches Paul, your host of Pints with Paul. And when you're in the Palm Beaches, get out and enjoy paradise. I'll talk to you next week. Peace.